Hello and welcome back to Live from Paris. It's time now for business news, and William Edwards joins me for that. And William, we're going to start off with that big news here in France that Peugeot Citroën are cutting 8,000 jobs.
That's right. Huge news, a huge blow for the French economy, but perhaps not a surprise. In fact, the chief executive, Philippe Varin, said that the move was pretty much inevitable, considering the company, according to him, is losing around 200 million euros each month. So this morning, he's called for a reduction in the social costs, which he says are massively affecting French labour costs, massively making them less competitive against its neighbours than should be the case. Let's take a look at some of the other reasons behind Peugeot's current problems.
The figures are bleak. At Peugeot Citroën, sales for the first quarter of this year were down 13% from last. The car maker relies on its European sales. 60% of its vehicles are sold on the continent, more than that of Renault, its nearest rival. As the region struggled with a debt crisis, so too has PSA, who, unlike Renault, hasn't been investing in any low-cost options.
PSA have gone for a more high-performance car, like with the DS brand. But it's tough because other manufacturers, notably in Germany, have been doing that for years, and it takes time to perfect. To spend 25, 30, even 35,000 euros on a new car isn't a simple decision, and we're seeing more buyers heading for cheaper options.
Nearly half of Peugeot's cars are made here in France, and high operating costs have made it tough to realise a profit. Also, fewer French people are buying French cars. Just over half of the French market goes to domestic manufacturers, 20% to Renault, the rest to Peugeot. The remainder is dominated by foreign brands, particularly German makes.
Lots of my colleagues advised me to buy a German car. They're a lot more reliable than French ones.
I used to have a French car.
And now you have a German one?
Yes, because it uses less petrol and emits less CO2, better performance, less consumption.
Despite government loans and state-backed buying schemes, Peugeot's not been able to pull itself out of trouble. The car maker says it's currently losing 200 million euros a month.
So those are Peugeot's woes, but it isn't just Peugeot that's suffering, is it?
No, let's take a look at Opel, which is, of course, based in Germany, but which is the European arm of General Motors, the US company. The head of Opel has stepped down, in fact, in the middle of a company restructuring. Carl Friedrich Strack, he was the head CEO of Opel and, of course, Vauxhall, which it is called in the UK. He only took on the job in January, actually, and it's only 2 weeks since he announced the latest restructuring plan for the troubled company, which has cost GM $750 million in the last year alone. Meanwhile, elsewhere in Europe, things are also rather difficult. In Italy, Fiat's boss has said the company will have one factory too many if the recovery really doesn't kick in 2 or 3 years at most. And the head of Renault, Carlos Ghosn, he said that, the first major restructuring by a car company in Europe may well spark off a load of other restructurings, because a lot of companies have overcapacity in Europe. A lot of companies have seen sales plummet. And now that Peugeot Citroën has really kicked off the restructuring and closing down a factory, well, maybe we'll see a few more similar moves from other companies.
OK, first step from Peugeot. We will watch and see what happens with other companies. But in the meantime, the bigger picture isn't looking much better across Europe, is it? No,
I'm afraid not. Of course, the Eurozone crisis is at the heart of a lot of the problems that car makers are having. And the currency itself actually has fallen to a new low, a 2-year low against the US dollar. You can see there, €1 now worth around $1.22. And meanwhile, Italy has been downgraded by Moody's ratings agency by 2 notches, just a couple of notches away from junk status now, in fact, their government debt. And it is preparing to raise €5 billion on the bond markets today, this Friday. Yesterday, their bond sale went pretty well. Overnight, they've had this downgrade, so we'll see how that affects today's sale.
OK, well, let's take a look at the markets today. They should have just been opening up here in Europe. That's absolutely right. And in fact, we can see that Italy story having an effect already. You can see the Milan FTSE there at the bottom, the only one market down there in the red. The rest of Europe's markets are bouncing back somewhat after a couple of choppy days. Meanwhile, let's see how things have been closing over in Asia. Now, there we've had some news that China's economic growth has cooled to 7.6% in the second quarter. Now, that is a slowdown in the Chinese economy from the first quarter, but you can see there everyone seems pretty pleased about the result, because there were some analysts saying things will be even worse than
those figures. So perhaps not so bad as it could have been.
OK, in line with expectations. Well, all this week now, to move on to a different story, we've been keeping an eye on the Farnborough International Air Show in the UK. And now, with the event coming to a close, the sales figures are in for the two giants of the airline industry. So let's take a look at just how Airbus and Boeing, those old competitors, did this year.
Grey skies and a cooling off of business at this year's Farnborough International Air Show. The show saw Boeing claw back lost ground over its European rival, Airbus. Boeing has secured a total of 396 orders worth $37 billion, far overshadowing Airbus's orders worth nearly $17 billion. Sales that represent some relief for Boeing after Airbus made a grand slam last year, cinching nearly $50 billion more in orders than the U.S. manufacturer. One boost this year for Boeing came from United Airlines, who has said it will buy 150 of Boeing's 737s to replace older, less fuel-efficient planes. For its part, Airbus says it hopes to sell a total of 300 aircraft this year. So far, only 4 of its 380 planes have been sold. But the European manufacturer says its target is far more for the super jumbo plane.
The goal remains 30 aircraft for the year, and I still think it's possible to do it.
Overall orders are down, with Boeing and Airbus together securing only about half what they secured last year. A decline that's no surprise given the hit of a faltering economy and lower government spending. But for some analysts, less demand has an upside, allowing both Boeing and Airbus to respond to previous orders.
Winnie Andrews there reporting on the Farnborough International Air Show. We're going to move on to a completely different story now. Qatar, they're continuing something of a global shopping spree. Tell us more about that.
Yeah, and this time it's haute couture, you could say, that's in the going into the shopping basket. They are buying Valentino. It's been announced, the Italian fashion house.
And when we say Qatar, you mean the Qatari royal family
themselves?
Well,
that is the question. It is a Qatari-backed investment fund, and it's thought to be the Qatari royal family which is behind this. They have often used anonymous investment vehicles to make their purchases, so it is thought to be the Qatari royal family. Of course, Qatar, the world's richest country in terms of GDP per head, with just 1.7 million people literally sitting on top of a huge oil and gas reserve. So its high-profile investments already, of course, have included everything from big shares in Barclays Bank to shares in Tiffany's. Of course, they recently bought Harrods, the famous London department store, and are involved in the Shard, the tallest building in Western Europe, which opened recently in London. So this is just another item on Qatar's shopping list.
OK, well, we'll see what else they snap up next. But finally, it does seem that there's still room at the other end of the fashion market.
Yes, if you're not quite in the market for a bit of Valentino, Primark, or Primani, as I suppose some shoppers call it. It is if you haven't heard of it, a budget chain in the UK, but they are doing very well. In fact, while one of the UK's most established high street retailers, Marks and Spencer's, announced its worst result in several years on Tuesday, Primark is going the opposite way in what is in the UK a double-dip recession. Their revenues are up by 13% in the last 4 months up to the end of June, and they're opening a huge new London store. They've recently expanded into Germany and Spain. So at the bottom end of the market, it looks like there are bargains to be had, and things are doing pretty well for the retailers themselves.
Well, people treating themselves to cheap and cheerful clothes in the recession, clearly. Thank you very much indeed, William Edwards, for that look at today's business news. And that's it from us for now. Many thanks for watching, and do stay tuned. Catherine Nicholson will be here right after the weather with more news headlines. Bye for now.